Monday, April 24th. We're off to a pretty boring start to the market this morning, with SPY currently breaking even, basically, at about 0% change, negative 0.05%. So not really moving much so far this morning. We didn't have any major news. We did have one earnings report coming out this morning with Coca-Cola, KO, ticker symbol KO. And they ended up double beating on their earnings with higher than expected earnings per share and for their revenue, coming in at 68-cent earnings per share versus 65 cents expected, and then revenue at 11 billion versus 10.8 billion expected for Coca-Cola. So their stock is up this morning, currently trading at 64.50. Up from about 64, so they're up, but not very much. So a lot of this was already priced in. We already know that Coca-Cola, whenever we have high inflation, this benefits them because they can raise their prices, and especially considering that they're such a low barrier to entry product. You know, only a $2 product. If you add another dollar onto that, that's another 50% that you're getting in margins. And people can still afford a $3 Coca-Cola. So, yeah, Coca-Cola is doing well this morning. Again, trading at 64.60, up a little bit, gapping up. And I think it's going to be pretty flat just based on what I just told y'all. I don't think that it would probably go to new highs for sure. I think it would stay below maybe 65, 66, maybe staying above 63, but if you do get some momentum, if people are buying in on this good earnings report, then that could definitely continue on. But my guess, a lot of it was already priced in. But right now, you're seeing QQQ pulling back. We're seeing Microsoft seeing a huge dip, 1.5% this morning. Let's check on Apple. The big Apple is down 0.15, so not really changing much. And then Amazon still kind of hanging towards its highs that we were seeing on Friday. This one just rallied basically all day long ahead of their earnings report, which is coming on Thursday. So they're reporting in the later half of the week, so you have a lot of time to wait on Amazon. I think that's going to put more selling pressure on them if the beginning of the week tech stocks that are reporting, if those are coming in bad, I think that could put some pressure on Amazon in the early half of the week. But I do think that Amazon, it's not priced as high as like Microsoft, Apple, Meta. If you're looking at the 52-week chart, right? They had a high of 146 on the 52-week chart, whereas the other names, Microsoft, it's basically trading at its 52-week high at 294. It's at 281, so it's down a little bit, but a lot closer to its 52-week high than Amazon for sure. Good morning, Mike. Good morning, Kamala. Mike is very low. Let me see. Hopefully I have it on. Input. I'll turn this up. This should be better, hopefully. Do I think Amazon will go up after earnings? I think that Amazon's going to be neutral. I think that they're going to have a bad earnings, but I think that's already priced in. That's my guess for Amazon. So for me, I think I would want to do an iron condor for Amazon. Considering Friday's rally, I would want to discount that a little bit. But my guess is this is probably going to be between maybe like $112, $113 at the top, and possibly above like 104. So I would shift the range up a little bit and say that it'll be above 104 and below 112. So I think that they're going to have maybe a better than expected or better than feared earnings. But even if it is better than feared, a lot of the stocks that did better than feared last week with Netflix, they still ended up pulling back, but it's trading pretty flat. And then Tesla was better than feared, but this one's down like 10%. So there could be some room to fall for it, but my guess, Amazon's probably going to be pretty flat for this week. All right, let me check in on the options that I got open. I opened a QQQ call credit spread right before close on Friday that are up about 12% right now. It looks like we're seeing a little bit of a recovery for Microsoft at the moment. Still down 1%, but it was down like 1.5% earlier. So some people buying into the dip here at 281.25 at the low. And then for Apple, not really changing much yet. So, my problem is with Amazon going up again today, 1.5%. This is the same thing that happened on Friday. If Amazon keeps going up while Microsoft and Apple fall or trade flat, then QQQ is going to manage its way up. So I'm going to exit the position at a small profit. Now we're above 317. Let me see. So I opened these for 41. They're going for 44 now. So a slight loss at the moment. But yeah, my guess, Amazon's going to keep on going up ahead of their earnings report, just like we saw on Friday. That's what everybody's kind of buying into. And then still have my Microsoft puts, still have my Apple puts that I'm going to hold on for. All right, and I'm watching that 316.67 level. We're starting to be bullish in terms of RSI, currently at 58. But I think either we're going to trade flat or we're going to go up today. And my guess, the reason why we're going to go up for QQQ is just because Amazon's leading the way. And you're seeing a small recovery for Microsoft and Apple right now. So we're either going to trade at that 316.67 price level at the end of the day, like we have for the last 2 days. We ended up closing basically right at that price level, or we would go up, is my guess. Yeah, Amazon's getting close to 109 right now. So still seeing that rally that you got on Friday. Microsoft still down 0.75%, and Apple is actually breaking even slightly positive so far. The other stock that I'm watching for earnings this week is going to be Visa. So Visa, it's kind of like the rest of the tech, big tech, trading at 52-week highs. I think that they could probably do better than what tech earnings is going to see for this week, just because, you know, it is a payment processor, and with the high inflation, they kind of benefit off that. They don't really get affected as much by it, at least. And their earnings has been pretty good for the last year, going from 179 to 218. Spending probably did slow down in Q1 a little bit. I know for the last couple of retail sales, they came in negative, so we might not see, you know, record numbers like 218, like their last earnings. But Wall Street, let's see what they're expecting. Good morning, AA. Good morning, Cinema Gal. Let's see. Wall Street is expecting 205 earnings per share from Visa. So I think that there's a possible beat in store for Visa. I don't think that retail sales slow down that much in order for them to see like a 15-20% drop, or sorry, 5 to 10% drop in earnings. So probably going to be doing well for this quarter, I would think. I think that they would come in above estimates. So Visa actually might be a decent candidate for a bullish trade for this week. I would probably be conservative with a put credit spread rather than doing a call debit spread and just being straight bullish. Yeah, QQQ's at 317.17 right now. It's definitely getting some bullish momentum. A lot of it thanks to Amazon and Apple breaking even right now. Wasn't able to get out of the call credit spreads just yet. They're going for 45 to 47, and I try to get out at 43. So I'm going to have to raise my prices. Check in on my Microsoft puts too. Those currently are up a total of 134 for another $40 of profit today so far. And my Apple puts are surprisingly up another $8 even with Apple breaking even this morning with a total return of 81 at the moment. So all right, these are going for 57 now, so they're getting expensive for the QQQ call credit spreads. Yeah, it's definitely starting to look like a bullish morning. You're trading at 70 on the RSI, so a lot of momentum to the upside. We could be seeing that 319 mark again. It really depends, I feel like, on Microsoft recovering back to break even and Apple seeing a bit of a recovery from the last couple of days of trading have been pretty rough for them. So if I would say Apple makes its way back up to 166 and above, then I could see a decent rally for QQQ, maybe reaching 319 or close to that 318.74 mark by the end of the day. Looking into a call debit spread that expires today. If we assume that we're going to hit 319, let's see. Or I could just buy a regular call. Let's see. If we buy a regular call, we want to look for a break even around 318.74. Right now, the 318 call is going for 77. And if we go with the 317 call, it's going for 134 with a break even of 318.30. So there's only about $40 of profit left in that if we hit our 318.74 target. So you're kind of overpaying for that right now, especially with the last 5-10 minutes of this rally. Definitely jacking up the prices for these. And then you go with the 316 call with a 318 break even. It's going for 200 right now. So you'll get like $70 of profit, $75 of profit for $200 spent. So right now the risk reward is a little bit lopsided. So I think I'll wait off on it for right now. What do I think SPY will be at for the end of this week? Let's see. Currently trading at 412.74, so it's just above that 412 mark that we've been seeing a lot for the last couple of weeks. We have an expected range of, let's see. We have an expected range for this week of $5.70 in either direction. So about $6 that we could go up or down. I would imagine it would be in the bottom end of its range just because the breadth of this rally that we've seen year to date has largely been just in tech stocks, right? It's just been in Apple, Microsoft, Amazon, and all the big tech names. It's basically what's led the market up until this point. So if these companies are reporting bad earnings this week, then I think it would be in the lower end of that range, and we would probably see below like 409 would be my guess. Or you could even call it just that 410 mark that everybody's had their eye on and what we bounced on this morning. So my guess is we would end the week below 410 for SPY if tech earnings is bad. If we have good tech earnings somehow, then maybe we end the week above like 413 or 414. Yeah, definitely seeing a rally in terms of RSI on the hourly chart and the 5-minute chart. So definitely getting heated up ahead of the earnings reports for this week on QQQ. But my guess before all the big earnings this week, we're probably going to end in a range of like 319 at the top or 318.74, the mark that we keep getting rejected by, and probably above 314 would be my guess. So pretty wide range that I've got set for tomorrow. And once, Microsoft reports, that's going to be the first big one of the week. And once, I'm not sure what other, I think Google is reporting tomorrow too. So once those big companies report, then we're going to get some volatility in one direction or the other. I think Google has been a lagger compared to Microsoft and Apple year to date. Starting at 86, trading at 106, so up about 25% compared to Apple up from 124 to 165, or about 30% there. So Google could be an okay position for the upside, or even trading neutral maybe. Sort of like Amazon, what I'm expecting for them. So we could do maybe an iron condor between like 103 and maybe 110 would be a good place to put this. That might be a little bit tight though, because Google makes some pretty wild moves on their earnings, like this one. The one before that, they ended up gapping down. The one before that, they gapped up. So they usually see some gaps in the market that I would not want to do an iron condor for. But yeah, this is one of the laggers in terms of tech. So there is some room for them to just kind of trade flat instead of, or go up rather than, falling like the rest of big tech. With the VIX so low, I almost want to go long straddles, but for SPY options are so expensive. Well, the good thing about earnings is that earnings is always going to be volatile, so the VIX doesn't really matter so much. Now, if you're trading like QQQ or SPY with all the earnings reports that are going on, then yeah. But usually if you're trading an earnings report, the volatility will be decently higher. Not to say that, we'll see the same implied volatility that we've seen for the past year. That's probably going to be muted. Like if you're looking at Google, it's only expected to make a $6 move or about 6%, whereas, a couple quarters ago, that might have been like a 10% move that was expected. So definitely have muted volatility, but there's still a lot of volatility to be had in earnings. Especially with this earnings, I feel like this one probably more critical than most, just because this is going to be like the start of big tech and their earnings slowing down. So I think there's going to be a lot more volatility than what's expected for tech earnings this season. What's my thoughts on Lumen? Earnings are coming up and their DCF is 67% underpriced. Lumen. I think that's... Let's see. They actually have positive earnings, so that's a good sign to start with. Last earnings, they ended up gapping down pretty rough. $5 to $4. A 20% gap down. That's huge. Lumen adds a new partner in defensive capabilities. Their earnings is going to be on 5/2, so you still have a couple weeks until this report. But let's see. What I like to do is compare the average earnings per share to what's expected from Wall Street. So I'll go to earningswhispers.com, type in the ticker LUMN. The expected earnings is 12 cents. Last quarter, they did 43 cents, so that would be a significant drop from last quarter. The quarter before that was 14 cents, 35 cents, 59 cents, and going back a couple of years, this company has been decently profitable. Let's see. So I'm not sure why Wall Street is expecting them to be not as profitable for this quarter. Right, they've done like 44 cents, 48 cents, 49 cents. So they had pretty stable earnings in 2020, 2021. They had the drop in earnings for this quarter to 14 cents. So I would think that they would do better than what Wall Street expects. So they could see a rally, and especially given that their stock is, down a ton just within the past year, that does give them a little bit more upside. So I would probably do some sort of bullish trade, maybe some long calls with a break even of like 275 or so. Maybe you're breaching this level that they haven't been able to recover, which is like 250 actually. So if you can find a break even of 250 after the earnings, I would take on that. And then if you're more bullish on it, maybe like 275. And then there's always a chance that it ends up rallying a lot more, which you could take advantage of. But yeah, the stock has done a shit ton. The earnings really isn't that bad, but Wall Street expects it to be pretty bad. All right, looks like QQQ is starting to stall out. It's up 0.2% right now, pulling back from its highs. You're going to have some support again at that 316.67 level that it keeps pivoting on. You're also going to have some support between 317 and 316.75, just based on the low volume in this trading range. So watch out for that below, and we'll see if we end up bouncing here. Amazon is pulling back right now to 108.50, so maybe they're giving up on their rally. It's down from 109.23, so that's actually a significant drop so far. So if Amazon can't keep, rallying to new highs, I think you're going to see either a muted QQQ today, so just trading flat, or you're just going to see it coming down, depending on where Microsoft and Apple are headed next. Microsoft's recovering a bit. Seems like money is just flowing in between these three names, Microsoft, Apple, and Amazon. Whenever Amazon comes down, then Apple and Microsoft will go up, and then the opposite. Whenever these two names are going down, Amazon goes up with it. So they're just kind of trying to balance out SPY, or not SPY, QQQ is what it seems like to me. Kind of tempted to just do a iron butterfly on that assumption. $2 wide in either direction. I'm getting paid $131 in credit for $200 of collateral, so I'm risking $70 for each. I would say there's a good chance that we end at 316.67, that mark again today. But so far this morning, it's looking a little bit more bullish. All right. I'm going to snag that iron butterfly right quick. New options alert, premium. Just opened a new QQQ iron butterfly expiring today, which is the 24th. I got him at 133. Assuming QQQ at 317 by the end of the day. All right, pulling back a little bit here into this low volume between 317 and 316.80. So if we do see a pivot, probably going to be around this mark or right below it at that 316.67 support level. Thoughts on Coca-Cola after the earnings? Seems like they're up too high. Might indulge in a put debit spread. Let's see. Coca-Cola. They had good earnings in terms of revenue, earnings per share, both better than expected. My trade would probably be an iron condor. I think it was already priced in. So if you're bearish on it, I would do a call credit spread rather than a put debit spread, just because it's probably going to keep trading high because the headlines are good with them beating earnings and beating revenue. But I don't think that they have much more room to rally because everybody already should know that Coca-Cola would benefit from the inflation that we've seen over the past year. So I would take a call credit spread rather than a put debit spread personally. So my trade would be probably like a 65.50 call credit spread. They only have 65 actually, so yeah. And right now that's paying about 21 cents for the end of this week. It's the risk reward ratio is a little bit tough Yeah, and the ask is 23, so you don't even have a wide bid ask to worry about. But yeah, my assumption was that that probably isn't going to rally much more, and that it would more trade flat rather than go up. So I would probably turn it into an iron condor, maybe assuming it'll be below 66 and assuming it'll be above 63 by the end of this week. And that trade, hold on, you're not getting paid shit for that trade. It's like 4 cents for an iron condor, assuming Coca-Cola between 63 and 66 by the end of the week. So not really much profit to make here. Yeah, my best guess though would be a 65, 66 call credit spread. All right, we're back below 317 for Qs. The iron butterfly I got is up by a whopping $6 at the moment. Still think we're going to end the day at 317 though, so I'm going to hold on. Premiums are so low, I hate it. Yeah. The only decent premiums are pre-earnings trades. Anything that's not a pre-earnings trade is just awful. Watching Amazon closely, want to get in under 100 with them as an investment. Amazon's going to have a pretty tough year, but we already know that. They already said that they're only going to do like $4 billion in net income or earnings for this year. So if you're, wanting to buy it in terms of like the next couple of years, I think you're going to have a pretty tough time. Because if they're trading at, $1 trillion company and this company is only making you $4 billion in net income a year, that means that they're trading at 250 price to earnings, which is not an attractive valuation considering the high interest rates that we have right now. Whenever interest rates are going high, you want to find companies that have lower multiples and companies that are ideally profitable. Don't want to just throw your money into anything, but you want to find some companies that have decent profits, decent price to earnings ratios, decent price to sales, and all the other metrics. And free cash flow positive is a plus, definitely. Google versus Amazon. I personally, let's see. I think that Google has more growth in it than Amazon does. Amazon has a lot going for it with AWS, but they're taking a lot of losses on, the Amazon business delivering and the e-commerce business. It's not a profit. It's kind of like, I would say, a lot like Costco in that they get all of their profits in the business from the membership. So having Amazon Prime and then also AWS, Amazon Web Services, that's where a bulk of the profits comes from. Google, on the other hand, I think that there's a little bit more opportunity in that. Just considering, actually, with YouTube and how popular YouTube is, unless there's some big competitor that comes to take away YouTube, then I could see Google coming back. And then, the potential of Google Bard being successful, I think that would actually benefit Google a lot more than what you'll see for Amazon. So between Google and Amazon, I would probably pick Google myself. Let's see. Let me check in on the price to earnings. I think price to earnings for Google, it's around 15, if I remember right. Let me double check though. Google. Price to earnings ratio is actually 23. Okay. Price to cash flow is 12. Price to book is 4.45. And if you're comparing this to Amazon, Amazon actually doesn't have a price to earnings ratio because their earnings has been negative for the past year. Price to cash flow ratio is 12 and price to book is 5.9. So if we look at cash flow and compare that, they're actually trading about the same. 12.4 versus 12.6. There's not really much difference there. But I think Google has more growth in it than Amazon personally. I think that there's more potential for it, at least. Who has tech earnings? Amazon, Microsoft, those stocks are going to be reporting this week. Google's going to be reporting this week. Visa, not really a tech stock, but they're going to be reporting this week. Let's see. What else? Meta is going to be reporting. Microsoft. Can't really think of any other names, but those are the major companies that are reporting this week. Meta is reporting on 4/26, so on Wednesday. The earliest reports are going to be on Tuesday with Microsoft and Google after hours. All right, QQQ is actually coming slightly negative, 0.05%, with Amazon pulling back to 107.50. So they lost that high of 109, definitely pulling back finally. Apple is slightly in the negative, down 0.08%. I really wish that Apple could bring its way back down to the pre-market lows when it was at like 164. That would be nice for my put debit spreads, but not there yet. But yeah, we're seeing some pullback in Apple, Amazon, Microsoft, so seeing a little bit of blood for QQ, but not really much so far. TSM at 85. Intel is reporting earnings this week on Thursday, I want to say. That's going to be a good one. So TSM gave a warning for the chip industry that chip sales are going to be slowing down for the next year. They still ended up going up on their earnings report, but now they're starting to pull back. So I think that chips are going to have a pretty rough earnings, especially looking at something like NVIDIA, which has just been nonstop rallying year to date at $270 right now. I think this one could have some move down, maybe based on Intel earnings on Thursday. So you could take a sympathy trade, maybe assuming that it'll go to like 265 or so. I wouldn't really want to heavily discount it to like 260 or like 250 yet. You would want to see their actual earnings or something that's more similar, like AMD, which is reporting earnings on May 2nd. Then you'll see a pullback for something like NVIDIA. But AMD is pulling back pretty rough right now. It was trading at highs of just above 100. Now it's down to 87. So not a good look for AMD at the moment. Would I use the wheel strategy to scale into a position? I feel like the wheel strategy it's kind of hard to scale into positions with the wheel just because you have to buy 100 shares. So if you're trading something like Apple, Microsoft, then you're spending tens of thousands of dollars. So I don't have that kind of money. But if you're looking for like cheaper stocks, I don't know, like UVixy, you could do that. Obviously with UVixy, you don't want to hold this long term. just because of the time decay associated with it. But yeah, if you want to look for cheap stocks at like $5, you could scale into those positions like on a bi-weekly basis every 2 weeks or like every month or however much you want to spend. I think that could be a decent way to get in, but you don't have the guarantee of getting assigned to buy the stock if you're not assigned on the put option. So I would rather just dollar cost average into it and then use any sort of pop in the stock as a means to sell cover calls on. VIX is actually up 0.5% today. VIX is currently up 2.7%. We do have the new VIX 1 day. I'm not sure what the ticker symbol is on Thinkorswim. I know the ticker symbol is VIX 1D, but not showing up yet for Thinkorswim. You can go to the CBOE, this website right here, and I think they have the chart for it. I was checking the chart yesterday, and it was there. There we go, performance. So right now it's at 1320. No, that's Friday's close. 1327, and now the last sale is 903. So this is down. But not sure where you would find real-time data for it. Yeah. I don't see it on my Thinkorswim at least. What broker do I use? Thinkorswim. And then to trade, I actually use Robinhood. Just because the user interface is the simplest. Although the fills are the worst. In terms of prices, in terms of time, Robinhood has the worst fills. All right, Amazon's going negative now. No bueno for QQQ. And Apple breaking even at the moment. Past the call for level 3. Not sure how long that takes. I would imagine that it would be pretty quick, but how do I feel about Tesla and BABA puts for 428? So this Friday, I'm guessing. Tesla, it's already down like 10% from after earnings. There could be some more to come with the coming earnings for this week. Maybe you could take a trade assuming that it'll go to like 155, but I don't think there's going to be that much volatility just because we already experienced so much volatility for it. I probably wouldn't expect it to go down a ton. So my guess either below like 160, 165, or sorry, 160 or 155. And I would probably want to set my expiration date a little bit later too. Maybe the week after rather than this week. All right, QQQ is coming back to that 316.67 level again. After that, decent sell-off. So now my iron butterflies are up $6, and my call credit spread's still up by 15 at the moment. So bouncing right, almost at that 200 moving average line, and where a lot of the volume came in between 316 and about 316.70. So I'm probably going to get some back and forth action between these price levels. So just going to wait on it for right now. Can't do iron butterflies yet. That's tough. Iron butterflies are the best trade in this market. It just keeps trading flat day after day. It's the most annoying shit ever. But yeah, like you're closing at the same price basically every day. You're either at the 318.75 mark like we were before. We kept closing around that. Last couple of days has been the 316.67 mark. Maybe you could see us closing at 314 today, but I think that would be after we have tech earnings. So maybe on like Wednesday or Thursday, we could close at 314. I'd probably want to extend my expiration date for Thursday instead of Wednesday just to give it a little bit more time to play out. Right now, that trade is going for 38 cents to assume we're going to be below 314 on Thursday. It's kind of expensive. I'd be okay with like 35, 36 cents, but 38 cents might be a bit much. Usually, trades like this are a lot cheaper. But I guess there's a lot of implied volatility with all the big tech earnings coming in the next couple of days. So it might be jacking up the price of these a bit more than it usually would. All right. I'm going to try to get these at 35 if I can. Again, we're just kind of stalling out right now between the 316 level and about 316.70. And I would imagine this could last a little bit. Maybe. Usually when we get caught in these ranges, it's good for a good like couple of hours. So we'll see if that's the case again today. That would be great for my iron butterfly for sure. So over this flat market, been 3 weeks of the same stuff. Yeah. The most frustrating market ever. Dead flat. Mine went blank on one of the questions that Robinhood called and pretty much got that wrong. Will I fail by missing one question? I never had to do like an interview with Robinhood, so I'm not 100% sure on that personally. But I think that they would take all the questions into account and not just one. So, not 100% sure. Does the spread on Ford... Let's see. Ford will be successful. Trading at 12 right now, up 2% today. Jeez. This one just trades flat, too. Let's see. Their earnings is scheduled for 5/2 May 2nd. It's already trading at the bottom end of its yearly range for the most part. So that one I would probably do an iron condor for like 11.50 to like 13 maybe. Maybe a little bit more upside for it. But yeah, 11.50 to 13 would be decent. All right, these put debit spreads are getting a little bit cheaper for me. Amazon's rallying again, up 0.25%. It was down to the 106s, but now it's slightly positive, 107.22. All right. Yeah, I'm going to try to pick up that put debit spread for QQQ. Wait a minute. That's not right. It was going for 35 earlier. Now it's going for 41, but QQQ went up. I must have been looking at 314. Oh, no. There we go. Now it's 35. I had the wrong strike prices. But yeah, I'm looking at 10 of them at 35, assuming QQQ to 314 on Thursday. Could be better to do an iron butterfly at that price level instead, though. Let's see. If we do an iron butterfly, I would do it wider just because you have a lot more time. More time is more volatility. Probably like $4, maybe even $5 wide. It's paying $344 for $150 max loss. That's actually a pretty good trade in terms of risk reward. In terms of where the stock is going to be, I would think that it would be below 314 after bad tech earnings, but we could have mixed tech to where some stocks see some gains, other stocks see losses, and it might just play out like the last couple of days for QQQ where it ends up trading flat. Just opened a new QQQ put debit spread expiring for the 27th at 35 each. There we go. Right now we're trading just above the 316.67 mark. Watching my call credit spread right now, trading for 41, basically break even. Still think we're just going to trade range bound. Range bound where the volume is 316 to 317. So probably want to take advantage of the bottom end of the range rather than closing here towards the top end. What indicators that I'm using? So the blue on the right is what's known as the volume profile. So this is showing you where people are buying, selling based on the price. So whenever there is a low in volume, let's see, like this is usually where you get the markets to pivot in one direction or the other. And then once you get trapped in these high volume ranges like we're in right now, you just kind of end up trading flat. So hence why we ended up bouncing at about 316. And now so far we're getting rejected at about 317. So there's a lot of volume, a lot of back and forth in this range, which is what I'm assuming for a better part of today. Either neutral trading in this range or maybe positive going back to 319 would be my two guesses for the day. Still bullish slightly at 54 on the RSI. So that's what's leading me to believe that we could be more bullish. We went right below it at like 44. So if you're trading, between like 45 and 55 or 40 and 60 RSI, you're just going to get a flat market. But if you're trading like solidly above 50 RSI like we were for the first, good 30 minutes, then that was bullish. And then MACD, I don't really use it. I don't pay too much attention to it, but this crossover, that would be a sell signal. So that would be bearish. But you want to see both of these lines, the blue and the yellow, going below zero in order for that to be really bearish. Put debit spread for Thursday, yes, on QQQ. But yeah, right now we're just getting back and forth in this price range of 316 to 317. So probably just going to burn some time here. My break even for the put debit spread is 314.65. But right now we're just seeing Amazon kind of holding up here. Not really trading much. You do have some supports roughly where it bounced at 106.80 just based on where the low volume is. That would be a pivot point for it. But you could just end up trading flat between 106.70 and then the next low volume range at 107.50. So far, that's what it's looking like, but a lot of people are wanting to buy Amazon ahead of their earnings reports the last couple of days, so. My Microsoft put debit spreads are going for 300 right now. I'm kind of tempted to take profits on that just because I feel like that's a decent price to sell. Considering I already got the QQQ put debit spread, I already have bearish positions for tech, and I'm up like 30% for this position. So I think it'll be worth taking profits ahead of the earnings, considering that I'm up already a decent amount. More money to make if I'm right, but I'd rather not take the chance of being wrong. So I'll try to close out at 3 each. Let's check on Apple. Slightly positive. There's a lot of support around the 200 moving average on the hourly chart. It's bounced on that a couple times. Both times in the pre-market. It's caught that support. If it ended up coming below it, right now it's at 164.19, so you'd be trading it just below 164, I would guess. But everybody keeps on wanting to buy it right above it. So still looking slightly bullish on the hourly chart. Not getting filled on that Microsoft put debit spread to close them at 300 apiece yet. QQQ pulling back again to 316.50. So again, we're not really making a move in either direction as of yet until we get below 316. Then we might start to get a move. And then that would be, that's actually head and shoulders on the 5-minute chart. Based on the pre-market highs and then the highs at 9:45. But you're going to need to go below 316 before I would call that bearish. We got some macro news coming out. Dallas Fed Manufacturing Index down 23.4 versus negative 15.7 expected in March. Pretty rough for manufacturing in the last 9-12 months has been awful. So that is a sign of recession. If manufacturing is pulling back and if manufacturers are making less goods, they expect less goods to be ordered and demanded in the future. So if these manufacturing index readings keep coming in negative, that's kind of forecasting a recession. But this is probably the most forecasted recession that we've ever had. Everybody's expecting it. So not really much of a surprise to the market at this point. Yeah, I did open an Iron Butterfly expiring for today on QQQ. And I did not get filled to close that put debit spread for Microsoft yet. Trading it right at the mid price, so the likelihood of getting filled on it on Robinhood is low as shit. But right now we're headed to the bottom of a range to 316, so I'm probably going to close out of my call credit spreads for QQQ that expired today that I opened on Friday. Right now those are up about $33. I only opened 3 of them. Tried to open 6, but I didn't get filled. But yeah, I'm going to close this at the bottom of the range right here. They're going for 27 each, 26 if I'm lucky. They're going for 25 now. And here we go. That might be a crack at the bottom of the range and some more downside to come. Wow, they really robbed me on that price. Okay. That was tough. Closing options alert. Just took profits on the 317, 318 QQQ call credit spread expiring today, which is the 24th at 25 each. And the ask price on that was 24, so they ended up robbing me of like $3 for that trade. But that's typical of Robinhood. Very, very typical. All right, Microsoft's pulling back a little bit more, down 0.85%, but I'm not. Oh, there we go. All right, I got filled at $3 a piece. QQQ is pulling back with Amazon down 0.4% now, so now you're getting a decent sell-off. Closing options alert. Just took profits on the 285, 290 Microsoft put debit spread expiring for this week on the 29th, I think, or 28th at, let's see, $3 each. All right. Now we're down to 315.75. So starting to look bearish here. The put debit spreads that I opened like 10 minutes ago are up nice little $40 so far. Apple is down 0.1%, so barely down, but starting to pull back. So you're seeing a pullback for Amazon, Microsoft, and Apple. So if those are starting to sell off, then yeah, you're going to get some flush for QQQ. But I would be watching that 314 mark. And then below that, you're going to have a lot of support at 313. That's been like the pivot point over and over again for the last month. It's been hard to go below 314 for any extended period of time. But if there is any extended period of time that we would go below it, it would be after earnings is my guess. Probably going to get some pops in the VIX now. VIX is up 2.8%, 2.9%. Not seeing a lot of volatility to support that, but UVIXI is up 0.76%. This one is, I feel like, is more accurate in terms of how much volatility is going on today, but I'm assuming a lot of people are buying puts ahead of earnings, so that's why you're seeing, a decent rise in the VIX up from 1675 to 1725. It's been pretty hard for the VIX to hold. Let's see, I think above like 16. I guess it's been like 1750 has been a hard mark for VIX to hold. So watch out for that. If it does end up coming up and holding that mark, then we could have some volatility ahead of us. But yeah, that put debit spread's already up. Nice little 17%. Since we broke that 316 level. Looking at the hourly chart, again, you're going to have that 314 support that we keep bouncing on. In terms of volume, I would be looking for 315 and below. So starting between 315 down to 314. Last support at 313. Maybe where you get some people buying the dip and sending this back to this 317 level or 316.67 level that we keep pivoting at. But yeah, that was a decent flush for the last 10 minutes of trading. Mostly led by Amazon giving up its highs, down 0.6% now. SPY is just below 412, so basically break even at this point. But yeah, the last 10 minutes have been a good sell-off. Starting at 10:30, right after the Dallas Manufacturing Index. We've had so many manufacturing indexes come in bad, so I'm surprised that the markets would react that much to it. Let's see. My strike price for the long on the iron butterflies, assuming that it's going to be above 315. I would probably want to close if we go below 314. That would signal a good sell-off to me, because that's where we ended up bouncing on Friday. So if we can't hold that level, then I would get out of that trade. Now Apple is down 0.4%. So now you're actually seeing a decent sell-off for Apple and across the board on tech. Thinking of doing a call credit spread 318, 319 for tomorrow. I don't think you would get much credit for it, but I would say that would be a solid trade. High probability for sure, but your risk reward is going to be pretty rough. I would say if we come back to like 317, that would be a better trade to make rather than opening it now while we're trading below 315. But yeah, we're definitely going into the low volume area. And if we're going below 314, that would be the end of this range that we've been in for what, like 2-3 weeks at this point, ever since April 5th. Tesla, let's see. Trading at 159 right now. Down 3.5% today, geez. Yeah. Yeah, below 160 was a decent idea, and then 155 would be my next price target for it. But yeah, everything in tech is just starting to sell off right now. Starting to see a little bit of weakness ahead of earnings. I would have thought that we would have traded flat before earnings, just like we have for the last couple of weeks, but not what's playing out currently. If we do end up bouncing today, I would imagine at, again, 314 for QQQ. And maybe we stage a rally at the end of the day. Spotify for earnings. Trading at 131 right now. Last earnings was how is this a unprofitable company? What the hell? What are they spending all their money on? Negative 151 earnings last quarter, negative 77, negative 86, 22. They're just largely unprofitable, and I don't know why Spotify would be unprofitable and what they're spending their money on, but I would say they kind of deserve to be as low as they are for the last few years of trading. In terms of the last year of trading, they're trading at 52-week highs. The earnings per share, let's see, their earnings is going to be on 425, so tomorrow after hours. Let's see what Earnings Whispers has for their estimates. Expected at negative 89 cents, or sorry, negative 93 cents according to Wall Street, and $3.4 billion in revenue. Last quarter they did negative 151 earnings, and a year ago they were doing negative 20, or actually positive 23 cents. So earnings has been on the decline significantly for the past year. I wouldn't expect that to really improve by much. Now, Wall Street expectations is 93 cents, and last quarter they did 151. So they would have to come in more in line with the quarter before that at negative 97 cents, which I think would maybe be possible. So maybe they do end up beating their earnings per share, or like meeting expectations. But considering the stock is trading at the highs, I would think that this would come down. And I would probably do a call credit spread assuming like below 130. There's a lot of volume at 133 or so. To like 135 would be my guess is where it's going to stay below. And their earnings is tomorrow, so you can realize that pretty quickly. You too, Timothy. Apple's down 0.5% now. Microsoft down another 1% today. Rough time for Apple and Microsoft lately. Let me make sure I type in the trades that I closed this morning and then the one that I opened new. Otherwise, I might forget. Let's go to April. Close out of the Microsoft at $3. So that one was $140 of profit. And then I opened this QQQ. Where the heck is it? 421. Close it today. QQQ, call credit, which is a bearish. Neutral strategy expiring today. Strike prices were 318 that I bought, 317 short. I just bought 3 of them. Not sure what price I got them out. Let me double check. All right. 123 for 3. So I got him at 41 and closed him at 25. 41, 25. So $48 in profit there. And then the 2 trades I opened this morning on QQQ. QQQ. Iron Butterfly, which is a neutral strategy, expiring today. Strike prices were 317 short, and then 315 and 319 long. 2 of them. Credit was, let's see, 133 each. And then final trade that I opened today, put debit spread, which is a bearish strategy, expiring for 427. Strike prices were 314 that I bought, 313 short, 10 of them at 35 on the debit. So that is all updated. Currently up by a whopping $80 for the month. Not a great month if y'all have seen my calendar. It's just been kind of going back and forth. Last week I made like 150. Most of it came on 420. $800 in profit. Seems like for me a lot of day trades have been going south, even with this Iron Butterfly that I opened today. But I'm still thinking as long as we stay above 314, we could end the day at 316.67. So I've got it both ways. If we do end up sinking below 314, I have the put debit spread. And then if we do end up holding that level and coming back to the 316.67 mark, then I can make profits on the Iron Butterfly. So I got it hedged. And hopefully we can make some profits on the QQQ put debit spread by the end of the week. And then the Apple put debit spread, assuming below 160 next month on May 19th. I still have a ton of time for that to play out. So yeah, seems like everything is doing okay today. Thinking of an Iron Condor 311, 312, 317, 318 for more reward. Yeah, I think that could be pretty good. I think that we'd stay above the 314, 313 levels. And then if you give yourself just a little bit more room to the downside to 312, I think you would be okay with that. And you would definitely get more risk reward on it. Or better risk reward at least. But right now we're trading right at 315. So some supports here. And then down below 314 and 313. Based on the levels we've been trading for the last 3 weeks of trading. Any FRC earnings plays? No, I'm not trading FRC for earnings, but geez, they are going up a ton today, 12%. Oh my God. Yeah, they're up from $14 at the open to $15, almost $16 now. I wouldn't want to trade FRC. There's going to be a ton of volatility. You could just do a long strangle or straddle, but there's probably a shit ton of implied volatility for it that I would not want to. I wouldn't want to be on either side of that trade, personally. Let's see. Let's see what KRE is doing. KRE is only up 0.25% as of right now. So, if anything, I might take like a KRE trade rather than an FRC just based on FRC earnings. And, you know, it's been trading in the bottom end of this range for a good while, ever since the Silicon Valley Bank mess. So you could probably assume that it'll be about 42 and like a put credit spread there. And maybe make a decent profit if FRC posted better earnings than what's expected. What am I trading on? I trade using Robinhood. The executions and then the charts are on Thinkorswim. And then the names that I'm trading, usually QQQ. Currently have a trade open for Apple. And that's about it right now. I closed out of the Microsoft trade from last week, so don't have a lot of positions open right now. But yeah, QQQ having a hard time below that 315 level, not really coming much below it at like 314.75. It keeps bouncing out. So far holding above it. You know, we're definitely looking bearish at 32 RSI and MACD. Both of the lines ended up crossing over negative. So that would tell me that today is bearish. But I would say as long as we're above 314, we're just going to stay in the range until big tech earnings tomorrow. Yeah, post earnings might be better, especially with the IV crush. But yeah, I think that's all the trades I got for y'all today. I'm going to wait on the Iron Butterfly. As long as we're above 314, 315, I think we're still going to close at closer to 316.67, just like we have the last couple of days of trading. So that's all I got for y'all today, and I will catch y'all tomorrow at 9:30. See you, everybody.